In this video, we're looking at Warner Brothers Discovery. We will look at their recent 10Q report. We will look at their revenue, their EBITDA, their debt level. We will look at what management is projecting for the next years. And then in the end, we will try to come up with the updated fair value of the company based on the management projections. So let's get started. First of all, soon 13F filings will be available. I will be making videos on super investors' portfolios. So if you want to make a deeper dive on super investors' portfolio, or you have other stock investment ideas, please write in the comments below. Okay, if we look at the chart of Warner Brothers Discovery, we can see that right after the merger, the stock lost almost half of its value. So for the last half a year, the stock lost almost 40%. And during the pre-market, right after the recent report was available, the stock is down around 5% at the moment of running the video. Okay, if we look at the recent quarterly report, we can see that the revenue was close to 9.8 billion. This is lower than expected. Analysts were expecting for the revenue to be close to 10.4 billion. And if we read the recent conference call, we can see that Gunnar pointed out that the main reasons behind the lower revenue numbers is the current economic environment. So consumers are spending less, and we can see lower spending on advertising. So this is visible in their numbers. The second reason is higher restructuring costs. So this is only the second quarter when WBD reports as a separate company. So I believe this is something to be expected. So yes, they have high restructuring costs. The current economic environment is unfavorable, but they're well positioned when the economic environment improves. So now let's look at the three reasons why I believe that with lower price, WBD has even higher upside potential. Okay, the first reason is their direct-to-consumer business. They have added 2.8 million subscribers during the recent quarter. So this is an increase of around 3% from the previous quarter. So the total number of subscribers is close to 95 million. If we look at the number of subscribers by region, we can see that they have close to 53 million domestic subscribers. This includes United States and Canada, while they have 41 billion international subscribers. We can also see that the growth rate internationally was much higher, more than 2 million additions, while only 500,000 domestically. But the average revenue per user is much higher domestically. So the growth rate of subscribers is much higher internationally, but the average revenue per user is much higher domestically. Also, the management is expecting for the number of subscribers to be close to 130 million by 2025. So they're expecting for the subscriber growth rate to be even higher in the next quarters. The second reason is that yes, we can see lower revenue numbers, but management has confirmed their guidance from the previous quarter. Management is really expecting for the synergies to happen. So they're expecting more than 3.5 billion cost synergies by 2024. So this is an increase from 3 billion. We also can see that they have debt of close to 50 billion. After subtracting 2.5 billion of cash, we get the net debt of close to 48 billion. Management has also confirmed the guidance that in 2024 will be leveraged at 2.5 to 3x. Right now the leverage is close to 5x, so this is debt divided by EBITDA. And management is expecting for the leverage to be 2.5 to 3x in 2024. So using their stable free cash flow, they are planning to reduce their debt. Also, the majority of their debt is at fixed rate. Their EBITDA in 1 year has confirmed to be close to 12 billion. So again, even with tough economic environment, management hasn't changed their guidance, which I believe is a very positive sign. Okay, the third reason is their valuation. So I have made this type of calculations before. We will update the numbers. The management projections haven't changed, but we will update the upside potential. So in 1 year, in 2023, management has confirmed the guidance of EBITDA of 12 billion. The leverage in 2024, according to management, will be 2.5 to 3x. Right now it's close to 5x. I took the median from that range to 4x. The free cash flow conversion, by the way, management has also confirmed their free cash flow conversion, is from 30% to 50%. I took 50% free cash flow conversion. I used the EV to EBITDA estimate of 10. So this on the conservative side. If you look at the chart of Disney and Netflix, they are trading at much higher EV to EBITDA multiple. So this is next 12-month EV to EBITDA of Disney and Netflix. So again, much higher than 10. As a result, we get the enterprise value of 120 billion. The debt in 2023, according to this calculation, will be close to 48 billion. I took the current cash position of 2.5 billion. As a result, we get the market cap of close to 75 billion. If we divide by the number of shares outstanding, we get the fair value of more than $30 per share. From the current price, at the moment of writing the video, of $12, so the price may be even lower when you will watch the video. This implies more than 150% upside. So the stock must be a double from this price level in 1 year, according to these calculations. Also, if we divide the free cash flow to the market cap, we get the free cash flow yield of more than 20%. So according to these metrics, the stock seems to be significantly undervalued. Okay, in this video, we looked at Warner Bros. Discovery. As management pointed out in their conference call, one of the main reasons behind the decline in the stock price is the current macroeconomic environment, and nobody can predict that. The second reason is restructuring costs. So the worst things that happened to WBD have already been priced in the stock. On the other hand, we saw significant growth in the direct-to-consumer business. They have added 2.8 million subscribers. And what is more important, the management is really confident in their numbers, so they confirm the guidance for the next year. And according to these numbers, the stock offers, with the lower price, even higher upside potential. Also, if you want to know more about other stock investment ideas, here is the video on Citigroup, the recent purchase of Warren Buffett. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.